Test, test. Am I coming through? Hello, everyone. Welcome to Charts and Chats with me and you. I'm Gordon Scott, and you're here. So I'm excited about that. Good morning, Parej. I've got some really interesting stuff for you guys to hear about today. And I have the inventor of the GoNoGo trend as my guest today, Alex Cole. I cannot wait to get a chance to introduce you to him and what he has developed. It's going to be fabulous. But before we get into that, let's dive right into the market look at this and see if I can share my screen okay this morning. And let's see, where is it? Yeah, I think we're here and we're hopefully going to be seeing charts in a second. A little bit different setup, moving things around. Here we go. The Aussie yen compared to the NASDAQ 100. That's where I like to start. And let me get my chat window up so I can. Thanks, Wayne. Doing well. How about you? Hope you're doing well also. Yeah, so it looks like I got my chat. Okay, there we go. What we're looking at is the Aussie yen 30-minute chart compared to the NASDAQ. Now, for those of you who may not have heard it before, I like to look at this currency pair compared to this futures price action because they are highly correlated over time, usually more than 70% correlated, about 75% correlated. And it's kind of a weird thing. It has to do with carry trade, but the persistence, they go in and out of correlation, but the persistence of that average correlation makes it worthwhile to, as a crossover, probably the best crossover among all currency pairs, to therefore get a bit of a forecast for what might be on tap for the U.S. markets, which, of course, is what we're all about here in this hour before the week opens on the U.S. stock market. So what we're looking at is the weekend change. Here's the Aussie yen on the top, and we see that the last bar on Friday was this little dip, and then we gapped from the close. It doesn't look like a gap because it's close to the candles, but it actually gapped from this low to that high. And since then, it's gone up and down, filled the gap, and we're almost right back around to the very place that we opened, interestingly enough. So the Aussie yen is actually saying at this instant in time, it is saying neutral. We're don't know where the markets are going to go. Started off with a mildly bullish move, got pretty bearish overnight, and has been rebounding. NASDAQ, on the other hand, gapped up, came down significantly, and is trying to recover. Has not quite made it up to its initial gap point. So this looks a little more on the bearish side. If you look over the past couple of days, we're really in this channel going sideways. So that is the initial look. That's where we're going to start. We're going to say the markets seem a little pessimistic, tilted, but they're keeping an open mind and they don't really know which way to go yet. Now, the context of, here we just know the market feels that way, but where'd we come from? Well, Friday was the non-farm payroll report in the US, and it was, it just blew past expectations, 50% higher than forecast. Large number of jobs. So that should have been massively bullish for the markets, right? I mean, we had S&P 500 over the past, 3 months. The S&P 500 has been giving earnings reports, and better than 70% of those companies have beat their estimates. Now, you could say, all that means is that people were overly optimistic, or analysts or people making the guesses were overly optimistic. But step back and think about that. Really? Overly optimistic in terms of, I'm sorry, overly pessimistic, right? Overly pessimistic in a moment when the COVID vaccines are getting out, when economies are anticipated to open up and brush aside the lockdown and all this other stuff, and the markets, roaring back from the COVID lows, we're going to be pessimistic about that, and then more importantly, to be wrong about that pessimism seems all kind of weird, right? I don't think it's I think it's too easy to say, oh, everybody was pessimistic. I mean, analysts stake their reputation on trying to get it right. I don't think that they were trying or felt they needed to be overly pessimistic. They just made this guess, and 70% of the time those guesses were wrong, which means that the U.S. economy's actual performance over the previous 3 months was better than anticipated. So we're having better than predicted economic performance in the U.S., and we have better job growth than what's happening, or than what was predicted. And the previous month was revised from a 5-digit number to a 6-digit number. So, and I don't mean 99 to 100. It was like 70 something to 140 or 160 something, more than double. So the non-farm payroll report in the U.S. is extremely bullish, and that's interesting, isn't it? Everything looks really good. And what's happening with the markets? We had a down day on Friday. Well, it was mostly down, rebounded, and then we're following that with a little bit of down. And markets don't know where to be going. From the base statistics, markets should be just roaring higher, and they are not. There is a big reason why they're not. There's a big reason why over the next 2 months, I think you're going to see real headwinds on the market. And it doesn't have to do with COVID. It doesn't have to do with politics. It doesn't have to do with the economic performance even. I think it merely has to do with how much money is feeling anxious about taking profit. Yeah, well, I'm going to have the opportunity to explain that to you in about 3 weeks, when I won't be having any guests, but I'll just have myself as my guest. And I will explain to you my 56-week pattern research that I've been doing now for about 9 years. And it is setting us up for a red letter day, as in a bad day, May 14th. And why? I'm sorry, I'm just going to tease you with that. Why May 14th is the day, I will be explaining in about 3 weeks. But until then, what we're seeing with this market, this increased volatility, this increased concern and so forth, I think really matches up with the way money managers are collecting money and the sources they're collecting it from in terms of investors, and what those investors' needs are, sort of off the chart, off the price action, what's going on behind the scenes among U.S. investors that they themselves are not really even paying attention to or necessarily aware of collectively. But it's creating a pattern which we've seen before, and so I'll be telling you how to do that. But that's a kind of long-term pattern. Today, I'm going to have the opportunity to show you a much shorter-term pattern and show you how you could actually put a guy like me, a professional technical analyst, and so many other people that I've actually helped to train, as I was part of I was the managing director over the Chartered Market Technician Association program. It is the program that makes the CMT at the end of your name when you take a bunch of tests. It gives that designation out. Yeah, so I was the managing director of the curriculum and the testing for that. So it was my job literally to read all of the technical analysis books out there and summarize which ones were the best for people to learn from, and then come up with tests that were so hard that these technical analysts would fail at somewhere between 50 and 60% of the time. And if they could pass all three of them, could prove themselves, it would actually have a connection to stuff in the markets. It was a big job, fun job, loved it, but we had to have lots of different people, a couple different committees and so forth, to put together what those exams were. And the thing that we noticed among all the stuff that we were taking in from professional technical analysts and the books that they were writing and people were writing about them, and what I personally noticed especially was it was difficult to take any one single indicator and prove that that indicator had value. Because although you could come up with lots of really interesting moments in time, like, well, look, if this indicator's here and it does that, then that means the market, right? There were some huge dramatic examples. But if you average those out over 5, 10, 15, 20 years, depending on your time frame, then the indicator would lose its value. As an average, the indicator was, it looked like random. And there are a lot of studies that try to disprove the use of technical analysis by doing exactly that, saying, here's an indicator, tested 1,000 times. Oh, it doesn't do any better than random in terms of predicting over whatever, characteristics they give it. And yet, in the hands of a skilled technician, reading these very same indicators, you could get guys that would beat the markets. I mean, literally in the sense of Fidelity. I went up and interviewed the 2 technical analysts they have on staff at Fidelity. There are 75 portfolio managers managing over $1 trillion in assets, and they have 2 guys that are technicians. And these 2 guys read through 500 charts in an hour. They literally do the blink test every day because they've been doing it for so long. They're just that good at it. But they start with just kind of looking a visual eye test on the trend and saying, what's it going, up or down, right? And then they sort out the ones that sort of pass their eye test. And then the ones that they do, then they put the indicators on that. And the indicators that they're looking at, they have 3 or 4 of their favorites. They say, well, we think this means that, and that means this, and so forth. And then they would give their best recommendations to these 75 portfolio managers, who then would take the advice or not. That was their method. And they were required to keep track of their own calls, well, we made a call that this is going to go higher, that this one's going to go lower, and so forth. And they would beat the S&P 500 by 30 basis points on any given month. That was their average, 30 basis points. That's 0.3% over the course of a month, month after month after month. So it was clear that the skilled technical analyst had value. They didn't have any way to, they didn't give these guys their own money and so forth. But they did keep their research around. So when I was working with the gentleman I'm about to introduce to you by the name of Alex Cole, I was interviewing him earlier this week, and we were working through some of the charts together. I could see that what he had developed was just like these 2 analysts at Fidelity, taking their skill and condensing it. But what's novel about what Alex has done is it's condensing it to a single indicator, which we are going to show to you here momentarily. And I hope that you will be as excited about it as I was. So Roy asks, even with stimulus checks coming around the 14th, May will be a big sell signal? Yes. Now, will it turn into a huge crashed market? Will the stimulus checks, have the power to overcome it? We'll see. But I will tell you exactly how to see. The stimulus checks will be nothing compared to this tsunami of selling that is likely to come around the 14th of May, and I'll be explaining that why that is. But this GoNoGo indicator is the name of it that Alex developed, and I'm excited to show it to you because I said this to Alex. I said, this is like having a technical analyst, a professional technical analyst in your back pocket to condense all this into a single indicator. And he agreed with my assessment. And let's hear a lot more about what else Alex has to say with his indicator. I'm not going to change my charts to anything just yet because I want to see you see me apply the indicator, and we're going to go from there. So let's bring Alex on. Hey, Alex, you're there. How's it going?
I am here. Good morning. How are you, Gordon? Nice to see you.
Is it me? Is my sound not working because I'm not hearing you? Anybody else hearing Alex? I
I am.
think we still got can you unmute him? It seems like we have this problem with panelist links sometimes. Oh, you guys can hear him? Oh, whoa. My
Yes,
bad.
can you?
Hang on. Let me get my audio. Yeah, it's there it is. That's my problem. Okay, sorry guys. Try again, Alex.
Can you hear me now?
Now I can hear you now. Thank you. Everybody else can hear you. It's just me
It's you.
doing something. All right. Thanks so much for taking time out and coming in this morning. I'm really excited to show everybody your stuff.
Anytime. Pleasure.
So I'm looking here at a chart of GLD. Might not be the best one, but I thought I would start off with this because GLD's got this very clear downward pattern, this price of gold. And I'm going to put your chart or your indicator on this. Now, for anybody that actually wants to get this indicator, I'm looking at TradingView, and this is my logged in account, but I'm going to start with the stuff that anybody with even a free account for TradingView would be able to get. So I'm just going to bring up the GoNoGo trend on GLD. That work as a starting point for you, Alex?
That's fine. Yeah, anything you want.
All right, so let's go there. If you bring up the indicators and you search in the public library for GoNoGo and GoNoGo trend. So we're going to look at this one first. Alex, why don't you go ahead and give us a little bit of an introduction to everything?
Absolutely. I'll take just a couple of minutes, I suppose. When I worked for Bloomberg for, I guess, 13 or so years, a lot of my work was working with institutional financial professionals, traders, PMs, sell-side research, all the whole spectrum of people that might use technical analysis. And what I found over the years was that we all complicate our charts a bit too much. It was something that I did. It was something that a lot of my my clients did, and we'd end up with indicator after indicator, panel after panel, moving average, count the bands, you name it. You'd end up with so much on the chart that even us technicians would get a little confused and not know what we're looking at. So one of the things that we wanted to do was, or that I wanted to do, was create a way to combine and blend all of the indicators that I looked at to identify trend and try to put it into a new data visual that wouldn't overwhelm the chart. So the idea was to use color coding the bars based on several of the trend identification concepts that that I found valuable working with clients, or that I'd found valuable for my own research when creating things at Bloomberg and when writing about technicals, or even when teaching technicals. A lot of my role at Bloomberg was teaching all the new hires into the financial program and doing seminars and that kind of thing for clients. So as you can see, even just with just those few panels and things on the chart, what we found was that it was very difficult to find key levels, difficult to draw support and resistance, difficult to find patterns. And I was an old school technician as well. I like the work of Edwards and McGee and pattern analysis and looking at technicals in terms of supply and demand. And it became very difficult when your price gets so small that you can't really see what's on there. So that was sort of the genesis of the idea. And when you take a number of inputs, and the GoNoGo charts has around 12 technical inputs, and nothing crazy. We talked about this during the week. Nothing, no moon phases, nothing completely out of the ordinary. Very robust technical themes that we were all using, and just trying to blend them into a chart that would color code price action so that you could see the rotation through trend. And so that's the sort of the quick backstory and how we ended up with the GoNoGo trend indicator.
Fantastic, thanks. So the colors. Tell us about the colors first off.
Yeah. So the Go colors are the blues, the bright blue and the aqua blue. So when in trend, it'll go in and out of the bright blue, and then the aqua blue is where you'll see weakness. So one of the key things to building is I wanted to build in weakness. So when you have a consolidation or a correction against the trend, as you'll see price pull back, you will see weakness because there's a sensitivity piece in there which tries to find tries to sort of ride price a little closely when prices are moving up. So those are the two go colors, or the bullish colors. And then when you fall into the no-go trend, those are the purples and the pinks. And if you see amber in there, that's the neutral bar, which often acts as a bridge between the color change. Not always. Gold is an interesting chart. It's had a couple of real attempts to move higher, which have sort of blown past some moving averages and spooked some people out in over the last few months. But generally, especially on a longer time frame, you're seeing an overwhelming move down. But right now, very, very strong no-go, really dark candles towards the end of that, towards the end of the chart there as we make new lows.
So it's not going to matter which thing we're looking at, which currency, which stock, which futures. They're all going to have that same blues bullish, and the greenish blue is the weaker bullish. The purple is the bearish. The pink is the less bearish pattern. Yeah. I just loved about gold. It's not recent, but back here, your very first no-go signal on that was so clear. And since then, it's been a real stinker of a trade if you're a market bull, and more no-goes than goes coming along the way. So
and I like a lot of multi-time frame too. So you have to be careful, obviously, taking a go signal if the weekly chart says it's a no-go. Of course, multi-time frame, very, very important. So you got to keep that in mind as well with those attempts to find a go trend, but keep it in perspective with the larger time frame as well.
So Gary's asking, is it some kind of oscillator with OB and OS levels coded into the candle colors?
There is a sister indicator, which I don't know if Gordon, you'd planned on bringing up today. The idea started as a way to simplify the price action, and the completion of sort of the overall go-no-go chart is to have the one color-coded price trend indicator, and then we have a momentum oscillator that does the same thing by blending momentum indicators into a single oscillator. So you with a
oh yeah, let me go ahead and bring that one up here. And so now this is subscription only, but I do have thanks to Alex complimentary access to it, so I'm going to show that to you here. And I'm a big fan of it. I like what I saw. Where is the
invite only scripts down the bottom left there?
That's the one I was after. Yeah, because I knew it. Is the Oscillator Pro or Squeeze?
Oscillator
Which one?
Pro, yeah. Oscillator Pro is fine. Yeah.
Okay, we'll bring up the Oscillator. All right. So what this does is oops, I did it twice.
I think you clicked on it twice there.
Basically does everything he's talking about, but puts it into a single oscillator, and it's beautiful work. There's a lot to be said here, but yeah, the short answer, I think Gary's question, did you just sort of take regular stuff and code in the colors? Yes, but it's more than just one or two, support or levels or whatever. It's as Alex said, it's all 12 different stuff going on. Real quick, Shukri, you guys get to cash out the stimulus check on the 14th or a couple of days later. Does everyone get it on the 14th? No. 14th, the May 14th and the stimulus check are not related. I mean, if that's actually the day, I didn't even know. But it's what I'm talking about is not related to that. So does everyone get it at the same time? No. I mean, at least maybe it's announced that some bulk does. I know that last time around, my kids got it at one day and I got it later, and it all seems to sort of come over time in a sort of haphazard manner. But all right, so what chart would you like for me to bring up to show this, Alex?
Well, there's so many that have seen really really good runs and then now have cooled off. Maybe something like Plug.
Okay. Oh yeah, you mentioned over the weekend to look at a few stocks that had a big run up and coming down. So yeah.
I don't know if you can easily put it on a dark background, like there's a dark theme.
Oh, that's right. I apologize. We talked about that. I had that ready. Let's go with the dark color theme here.
Yeah, just because the colors show up a little bit better. So one of the things that with plug is or not necessarily with plug, but with any the oscillator is nice that somebody asked about that, because the oscillator used in conjunction with the trend on the top is really kind of exciting, because momentum analysis really over the years has developed a little bit. And in the old days, we just looked for overbought and oversold swings. And then we've done a lot of research looking at whether you can use oscillators in a trend. And the way that the GoNoGo oscillator was built was designed to have an objective level of support around the zero line. So if you just bring in a bit more of the trend there, Gordon, so that you can see a little bit further back, what we want to see is maybe zoom in so we can get the first go signal maybe forward.
Back here, okay.
Yeah, so sort of that much. Yeah, so like once you start looking at the trend, what you want to see is that the oscillator finds support at the zero line as the trend continues, and that happens because you've got your momentum indicators finding going into the neutral zone or neutral level, all the inputs going neutral, because momentum in an uptrend should go really, really enthusiastic, excessive buying, and then it will cool off. But we shouldn't see any oversold conditions in a nice, healthy uptrend. So what you see with the GoNoGo oscillator is that it'll crash to the zero line while we're in a strong trend. So those can be considered as, entry, maybe low risk entries, opportunities to scale into position. And so as long as the GoNoGo trend stays in those blue colors, and the oscillator stays above zero, the trend can be considered healthy. And you notice that when it crosses below zero towards the end, that kind of leads then the change in color and the correction that we're sort of in now, like towards the right of the chart. You notice that it breaks below zero, and then the price starts to roll out of the blues into the amber, and then into the first of the no-goes, and then now we've rolled over again, as the oscillator this time should be finding resistance at zero rather than support, because the trend has flipped. So that sort of objective level for an oscillator can be really, really useful. So we've
that's interesting. So you got this sort of long flat space here. By the time you're into this 5 or 10 days, you could just say, well, that's it. That's my stop loss. And I mean, because if you caught this back here and you had this nice run on plug, then that candle, if you weren't out by that time, then that's kind of your first warning signal, because it did hold support, and then that break, even before the no-go, says that trend is not what it used to be. So that's really interesting.
We call that riding the zero line, and that's really powerful. The longer it rides the zero line, typically, the more significant it is. Like if it was to pop back into positive territory, we may well have seen a new leg up, but it didn't. It went negative, and then you sort of see the roll through the no-go colors then.
Okay, so we got a request to have a look at the SPX chart here. With the go no go, and we've got a brand new go indicator. It's not quite riding the zero line, but it did pop up. Give us your read on this.
If you can pull in a little bit more, just a little bit more data, maybe back, you can see right sort of from here, it was in a trend channel. We all had probably all had the same trend channel on the chart, with the highs going up there. But the last couple of days of last week really have flirted with that trend channel and caused the oscillator to struggle at the zero line. And it went amber on Thursday, rallied really strongly on Friday, and the oscillator is now back at the zero line. So it's very, very interesting at the moment. Quite a significant week of volatile trading, but currently enough of the criteria for the go-no-go trend are finding it still to be bullish, and price rallied really strongly on Friday. We'd like to see the oscillator obviously get above zero and then stay above zero, but SPX is interesting.
Okay, so that's good. Quick question from Subram. This indicator used for both Forex and stocks, and I believe the answer is yes, right, Alex?
anything. Yeah,
Yeah,
it
it's all
was
about price
designed like
actions, not a
right, right.
fundamental tide. Yeah.
Any set of data. So it's like any indicator. You know, if you think of RSI or a moving average, anything that has price, anything that has data, is fine. So yeah,
So
one of the
Gary, are you asking just really quick on the U.S. chart, U.S. 30? You mean 30-minute, Gary? As he's chatting in, I just wanted to make sure we get that. And then yes, Anton, we'll be looking at a forex example
yeah, we
here.
could do. I was looking at GBP USD. I'm obviously British, so I was I was looking at that for my dad. You know, he was asking if we should transfer some more pounds over to an American account because it's been rallying. Um,
Did I get GBP out? Misspelling there. Sorry. Yeah. Okay, there you go.
Yeah, so if you zoom in a little bit there, we've had this nice go run, and we pulled back. I was actually talking to my dad on the phone on Friday. It was riding the zero line there at the bottom after a pullback in that uptrend, and then it's just dipped, so struggling to hold the zero line. So we'll be interested to see where that one goes now.
Yeah, but so your read on this would be it was already a weakening trend, riding the zero line, still nice upward channel, but that break now makes you skeptical.
Makes me skeptical, and it is at the bottom of. If you did draw a trend line on there, it's right at that sort of, you know.
Yeah.
It's really right there, you know. Is
Well,
it
that's
breaking
actually a good point. See, so this is what I was saying when Alex was showing this to me earlier last week. What I was saying is like it has all of this stuff built in. You know, so here's the trend line. If you're a technician and you're looking at this trend line, you care what's happening. Every time we're hitting this trend line, we're bouncing off it. We're not bouncing off of it right now, not on the immediate candle. And you could go and draw the trend line and kind of look at it, but the oscillator and the colors, that's all built in. That's kind of the point of the whole GoNoGo.
And even if you do like to draw your trend lines, the fact that there's not a lot else on the chart, you can still draw those trend lines unobstructed.
True.
Have the whole price panel to do it. But yeah, so that's it. That's GBP is interesting.
So let's see. Does it work on any time frame? Paresh asks.
Yes. Yeah, we have some very short term is not perhaps my thing, but yes, like any indicator, any time frame, any periodicity.
Okay. So Gary meant the Dow Jones. I'm going to bring up the Dow Jones. Let's see, that's YM futures and see how those are stacking up this morning. Yeah, continuous in front. There we go. All right, so this is the Dow chart on a daily. I'm actually going to bring this down to a 30 minutes. So we'll operate two birds in one stone here, multiple time frames, 30-minute chart, and the Dow. So we've got a brand new Go chart on the 30-minute view from the Dow futures coming from over the weekend overnight action. That's kind of interesting. What would be your read on that, Alex?
We got the other piece that I don't think we mentioned was that I wanted to get a complete, just sort of intellectually, I wanted to get a complete overview, and I think it's, you know, very, it's a great bit of feedback from you to say that it's a bit like having a technician sitting over your shoulder and having their sort of complete process. So the goal was to get all of the technicals that was important into the chart. So the other piece that's in there is that when the oscillator goes to darker blue, that's showing volume heavier than it has been in the recent past. So whenever the oscillator, usually on a correction or it's, you know, in a consolidation pattern, you will see volume shrink, and that's totally textbook and normal. And then on any kind of break, you want volume to pick up, right? We all know that. So what's interesting to me on this is that with this new Go, we've actually got heavy volume and the oscillator going into positive territory on a darker blue color of the oscillator.
Interesting.
So that's interesting. And then we're going to be at that prior high. So that's going to be, you know, we've got volume.
So that rise in volume.
Yeah.
That's what you're talking about. Okay.
And you can see that previous spell of high volume is sort of corresponds with that darker blue of the oscillator there. So it's a short term. It's a comparison to a short term look back. So when volume picks up, it goes into the dark blue. So
are the colors and indicators volume weighted in your calculations?
no, the GoNoGo trend is not volume weighted at all. There's no
Okay.
volume in the price trend indicator, but there is volume in the oscillator just to show.
So
it
you would use volume in
confirmatory
conjunction with your GoNoGo.
as a confirmatory.
Confirm. Yeah. Okay. Okay. Good. So Shukri wants to see if we can be looking at some cryptos here. Look at Bitcoin with this indicator.
Let's do Bitcoin. I guess start with the daily for Bitcoin.
Yeah, Shukri, tell us what outside of Bitcoin you want to see with cryptos too. I mean, cryptos are really interesting, but I think what a lot of people want to know on cryptos is, is there a coin out there that's other than Bitcoin worth actually talking about? I don't know. I mean, I can't speak to the underlying on any crypto, but the technicals, it's like all we would really need to see is that Bitcoin had a pretty good trend and that this other crypto had some sort of strong trend. And as long as your bet wasn't too big, that could be an interesting play. So let's see if we can kind of uncover a little bit of that. We got Bitcoin going here on the daily. Give us your read, Alex.
Yeah, we've had I think the last go that it's still had a fresh go, like a resurgent go out of that triangle in the middle there. But I think the last go was at around 10,000 before that, and it was fairly well supported throughout that trend. Right there, yeah.
Yeah, wow, look at that, yeah.
And then we did this last correction. It did push the oscillator below zero with that dip, but it never fell out of the go colors. And so now we're riding the zero line and actually looking for a re-entry. If this
so that is fascinating. Here, clear up at 50,000. Your indicator is saying this could be a re-entry area. If you were to take this and it were to drop down, okay, game's over real quick. I mean, if you're trading it, right? Not trading, holding forever. But if you're trading it, then you're going to get in. You're going to take this small risk, and then if you're right, because it is Bitcoin, then there's very strong upside potential. And so, wow, that's a nice setup. Actually, I like that. And so, Shukri, what other coin do you think we should look at? You know coins better than I do. So now that we've got a look on Bitcoin, what's the other coin to be paying attention to? Paresh is saying bring the Canadian 50, which I'm not sure about the Canadian 50 symbol for that. Let's see. Futures. Oops. Oh, Chinese index, of course, not Canadian. Yes. Chinese index, FXI, or is there a futures? There we go. FTSE 50 China futures. Got it. Right there. Okay. And this is also daily, and that's looking ugly.
Yeah. And what we found anecdotally is that trend color change will often coincide with breaks of important levels. So, you could well have been putting a horizontal-ish trend line on there, and then those amber bars and that no-go would break a key level that everybody's looking at.
Yeah,
it coincides often with what you see on the chart as important levels of support and resistance, and that sort of idea of market supply and demand being played out in price. But again, the oscillator, you got the weakness in price, the oscillator breaks below zero, and then the trend goes into the amber and then into the no-go. It should, in theory, you'll get the same thing, same sort of concept, same sort of things happening when price moves.
This is great. This is really great. Okay, so Ethereum, Polkadot, or Cardano. We'll look at Ethereum really quick. Ooh, multiple goes, riding that zero line after a rebound for we got a no-go in the middle, but immediately overdone by a go. Let's see. And we've got Cardano. I want to bring up Cardano, but I can't remember what the Shukri will go for flow. Yes. So Cardano, what's the ticker on Cardano? I can't remember. Shukri 88. That's right. 88. 88 USD. There we go. Oh, beautiful. Love that. Long, strong trend, of course, just like a lot of the cryptos, but now riding the zero line, really tight setup. Either, get in, get right out at one, I would say, and or ride the train. That's good. That's a good look. Okay.
And just to point out with the full indicator, because I think you still have the free trend on here, right? Not the pro trend.
Oh yeah. Right. Should I bring up the?
Yeah, if you want to just throw it on there, because I also automated a lot of the icons that are based on the interaction of the oscillator and the trend together. So you see those green circles on the trend underneath the price chart. Those are sort
down
of trend,
here.
Yeah, those are trend continuation icons based on what's happening with the oscillator and the trend. So right now on where it's riding the zero line, if it pops back into positive territory, we'll likely see a low risk entry appear under the price bar. So you can see those come in throughout the trend. If the trend remains in place and the oscillator does what it's supposed to do, we'll see those appear underpriced throughout the trend.
That's beautiful. So as if you do subscribe to your indicators, how do people subscribe to your indicators? Just through TradingView, or do you have to go to your website?
Go to our website, GoNoGoCharts.com. You'd need to subscribe to the analytics package for the indicators themselves. That's if you go to subscribe. So the analytics package right there, the third one is how we would get you all set up. And there's more that comes with it. There's another indicator that I think we may have briefly touched on, Gordon, in the week, which tries to highlight those areas of reduced volatility, the consolidation along the zero line. It's called the GoNoGo squeeze. But again, all on the same chart, no extra indicators, nothing clouding the chart. And then it also comes with those icons that we were just highlighting. So that's the analytics, and that's where you can get it.
So you do a pre-market Monday morning flight path?
Yeah, and that comes with the analytics package, actually. So if you subscribe for analytics, we send that out as well.
Okay, good. It's not a live thing. Am I keeping you from your own pre-market? No, everybody gets to hear it right here from Alex. That's fantastic. Thank you.
That's already scheduled. That's already set up to go out at 9 o'clock, I think. So everybody's getting that. Yep.
So was there a reason for the choice of words go, no go? That's Helen asking. So Helen, I think Alex, you mentioned it was like NASA, right? Go or no go, launch or don't.
It came from the pass fail sort of go no go testing. That is terminology used for it's a go or a no go. It's a pass fail type of testing, and it's used in NASA a lot. So the idea of is it a go for launch for your investment, based on a technical environment consideration of all the technical things that make sense.
Okay. Yeah, there we go. Thank you. How to get GoNo Pro Oscillator in TradingView? Is it paid also? Oh, it looks like I was answering that for you, Roy. There you are. So now when somebody comes to the website and subscribes, then they get it on TradingView or maybe other platforms.
There's no automatic enablement on TradingView at the moment. So when you come and subscribe, I will then enable the TradingView user ID.
Oh, it's high touch. It's Alex is giving it to you in your TradingView account.
Got an email from me, and we can have a chat over any questions, anything like that. We're at the moment TradingView. There's also this was all sort of my stuff that was institutional and used with clients. So we've only officially just launched, but we're working with a lot of platforms at the moment.
Yeah, that's right. So this is brand new. You guys haven't been around as an entity for very long, and everybody, you're lucky to be hearing about this so early. In my opinion, this is why I wanted to bring Alex as one of my guests, because I felt like what he was doing is, I mean, you're literally for $10 or $50, whatever level you want to go, you got a pro analyst in your pocket. And we've already gone through a few charts. You see how good it was. I know I'm doing a little bit of a pitch for Alex here, but I hope you don't mind hearing it, because when I bring somebody to you, it's because I know that they're quality, and I've got history. I actually don't have a lot of history with Alex directly. We were joking about this when we were interviewing, but he and I have worked for contractor projects for Wiley for years on, like, it's, I would do the questions and he would do the videos for Wiley's CMT testing. And so we would see each other's work, but we never actually collaborated or did anything up until now. On the other hand, his partner, Tyler Wood, and I have been close associates and friends now for almost a decade. And so I feel like I have a pretty strong connection, but regardless, what I know is that this is quality work. It's worth you hearing about. So training and support included, asks Paresh. Alex, what's the answer there?
We have, so I put together a lot of documentation that I send out that explain the indicators. And also we have a YouTube channel where we walk through our research each week. So every Friday we'll walk through the research that we put out on Monday, and we'll look at the week and what happened. I do also some short videos for the investing channel and some other things on our YouTube channel. But also I am currently working on, like Gordon said, we've just sort of started this. It's been a private thing for 15 years or so, but I'm putting together tutorial videos on all the indicators, all the setups, my favorite setups, what to look for on each chart, what to look for with each indicator. I'm putting those videos together. But in the meantime, I'm happy to jump on the phone with anybody that has questions, or
wow, look at that. Listen, that offer is not going to be around for long. I can tell you what, once he gets 1,000 subscribers, he's not going to be able to call you on the phone. But he said it now here on this show. So grab him, take advantage of that. That is awesome.
Send me an email if you have questions. We can
That's a big yes to your question, Paresh. Any training and support included? A big yes. So is there a trial period? Anton wants to know.
There's a no risk trial, 7 days for we'll put it on TradingView, and that's honestly, if you do want to try it, that's when I would suggest you get in touch with me, and I can answer any questions during that week.
Okay, fantastic. Hey, I appreciate you hanging around for a little longer than
No
what I asked you for, Alex. Can you give us one example of a trade idea you liked and what it might look like with your indicators?
Yeah. So one of my favorite setups is looking for the first. And you can pull up anything really. Let's do Neo was one we were recommending for a while. Let's pull up Neo and then go back a bit. So go back to, it's early days. I mean, Neo went from, who knows what it went from, like $6 or something. But let's stop right there in the middle, maybe in the middle where that go flag is. Go back, or even there, yeah. So zoom in so we can see that area a little bit better. One thing that I really like a lot is, and this is what somebody mentioned about timeframes. I've got some real fast traders, day traders, using this on 1 minute charts, and one of the things that we not necessarily my cup of tea, being an institutional person for so long. But one of the setups that I like a lot, and what we found is that when you have a go trend identified, we wait then for the first low risk entry, which is the green circle. So that green circle, right to the right, move over to not the one on the day of the bar, but the one right there. That would be a really nice setup that we would look for, because you've identified a go trend, price has moved sharply higher and then has come back. It's a bit like looking for or automating bull flags or buying the dip, or whatever you want to call that idea. You've got a trend identified, you've got a slight pullback, and then what you're saying when you see the green circle, or when you're saying that momentum has come back in the direction of the new trend that's been identified. So the first green low risk entry or trend continuation icon, again, this is not a trading system. It's a way to understand technical analysis in a
Yeah.
simple fashion. But
Yep.
what you're able to say at this point is that you've got renewed momentum in the direction of the trend. You're able to say that fairly with certainty because of all of the technicals that are combined. So what that allows you to then do is set a very tight stop, like you said. You were expecting
Right there,
momentum,
or something. Yeah.
at prior low or at a break of the oscillator below zero, whatever you would want to use maybe, and then you expect price to move after that first low risk entry. So that's what a lot of my clients that are using this are looking for. They're looking for the first sort of low risk or trend continuation icon after a go trend has been identified, because it helps cut out a lot of the whipsaws, a lot of the a lot of
Right.
like
So I
even on
want to
that
quickly
gold,
make a plug here. Oh, sorry, go ahead.
No, I was just going to say, even that gold chart we started at, those goes that have come throughout this, they haven't been followed up. There's been no follow through with a low risk re-entry. So that's a sort of an example of when maybe you wouldn't have taken that. The weekly chart is in a no-go. You see the go on the daily, but there's no re-entry first. There's no first green circle. So that's sort of the situation that I would look at, and that's one we did look at back then for Neo.
Okay, very, very good. I want to sort of do my own little shameless plug here. I've got a class coming up in about 3 months, in June, I believe it is, May, June. I can't remember what the dates are. The low-priced stocks class. This is like penny stocks, but not necessarily sub $1 stuff. It's low-priced, high opportunity. And the reason I want to bring that up right now is because NIO is a stock that was identified by the system I would teach. At this time here that we are looking at, back in the May, June, last summer 2020 timeframe, this low price stock came on the radar, and I didn't know about GoNoGo. In fact, I don't think it was even ready for prime time yet. But imagine having a low cost system and an indicator like GoNoGo, or a low price stock system. Right here, this particular trade setup would be one that you would have been looking at, and how to find these kinds of trades, how to apply GoNoGo or any other situation that you're going to be looking at. That is absolutely what we're going to cover in that class. So if you're interested in looking for these kinds of trades, please come back and check out the class that I'll be teaching on that, and where to set the stops, how to tell, not just for probability's sake, but for you and your own personality. Are you the polar bear trader? Are you the dragonfly trader? Those are some of my little profiles that I like to work with people on. So anyway, that's coming. But I also want to be able to point out here that this, this can be used for short. To answer Subram's question, can you use to look for shorts? And I really feel like where we are now for some of these things is, well, let me just look at QQQ. Full disclosure, I am writing a put option trade on QQQ, and in no small part because over the past week I looked at this and felt very confirmed. I have my own reasons for wanting to go short, but right there, how about that no-go system? We just went from peak to purple with the NASDAQ. I feel like, we'll probably see a little bit of movement come up, but there's this huge head and shoulders pattern, just textbook head and shoulders, rising volume coming into the second to the second shoulder. I spent so much time trying to define head and shoulders to make sure that what we put into the CMT exam material was solid and useful. And when I saw this happen over the past couple months, I just this is everything we talked about. So this, can it be used for short? Sure.
And what's nice about this is that break of the oscillator last week to the below zero with the volume would have absolutely led you to think. And then you look
presaging it, yeah.
And then the other thing just to mention real quick, those green circles in a downtrend become red circles. So you just mentioned that we might come higher over the next couple of days. Well, if we do, then we'll look for the oscillator to come up against the zero line from below. And if it does come up against zero from below and roll over, we'll get a red circle above price. So that'll be the low risk re-entry or trend continuation for a no-go. So those trend continuation icons obviously work for both, go and no go. So if it does come up a little bit, it'll retest that, and it'll in effect, in textbook terms, it'll be retesting the neckline of the head and shoulders, which we'll see played out on the oscillator.
Right.
And then if
right.
you see that on the oscillator, it'll roll over and we'll get the red circle, which would indicate a low risk re-entry into the no-go that you're already in.
Got it. Excellent. Hey, everybody, if you were here last week, you heard Brandon Chapman talk about this trade, XLE, and the unusual options activity between 54 and 59, a couple of months out. And this, let me just remind you that last week I brought Brandon on here and he talked about that trade down here while it was at 49. It is now at 53. If for whatever reason you took that debit spread trade right now, you need to send Brandon a thank you email because this is awesome move. What he showed us back then was that there was unusual options activity way out of the money 3 months forward. I mean, really, a high thing. And so the website, Paresh, is GoNoGo charts, GoNoGo charts, right?
I'll put it in the chat if you want, Gordon.
Oh, thank you. Yeah, GoNoGo charts. There it is. Okay. Yeah. So anyway, Brandon gave us that beautiful option thing. Again, I got the option class coming up too. We would talk specifically about how to take an option trade like this and how to turn it into a trade that would make sense. And look at how well the GoNoGo indicators just confirmed all that. Even the day after Brandon talked to us, you still get these 2 days of confirmation where it rejects the zero and starts heading higher again. And so, even if you didn't jump in when Brandon first told us about it, you got 2 days to fret about it and still have a chance, a fantastic trade. And so, I'm just trying to show you guys, coming here once a week in front of the U.S. market opens is going to give you great trading ideas, because that last one was a clear winner. And what Alex has been showing us here with GoNoGo is going to be useful. We're coming into 4 minutes before the market open, and we're seeing, let me just revisit my earlier Aussie yen. We're still seeing that Aussie yen and NASDAQ strength building into the open. My guess will be that there will be a bit of a fight right at the open here to see which way the markets want to go. I don't know how much buying will occur. I anticipate that selling will overwhelm in the near future. But if I'm wrong, then that just tells you how insanely bullish the markets and investors still are. I don't quite think that we're there yet, because we're through most of earnings. We don't have a lot of surprise noise. It's going to be kind of quiet for March in terms of news and corporate earnings and events that way. But we got to let the charts speak for themselves. So we are seeing a bullish lilt coming into the open, and my guess is that will make longs to be a little bit more productive today. Look for that to turn through the course of the week, and for shorts to be the better play coming in through the later week, except in crypto and energy. Okay, that's the quick read for the pre-market this week. Alex, any final thoughts from you that you might want to chime in with?
No, I love to see that energy trade from last week. Energy has been a huge outperformer, and when you look at this, energy has definitely been in a strong trend. So that was interesting to see. And no, thanks for having me on. I really appreciate it. And anytime you want me on again, let me know. Be happy to help.
Terrific. We will look to have you back, Alex. This was really great. We went through a lot of examples. We kept you around a lot, but I'm sure that next time we bring you back, we're going to just go even faster, pepper you with even more examples. So great stuff. Appreciate it. Hopefully everybody, you felt like that was worth your time. Yeah, we're getting thanks. Very nice. And so glad we had you on, Alex. We'll do it again.
Thank you so much. Appreciate it, Gordon.
All right, everybody. Thanks for spending your hour pre-market on a Monday with me. And I'm going to get better and better at this and the technology, and hopefully that you're going to get even more value as we go. The next guest that we will be featuring next week is a gentleman by the name of Dave Settle. Dave Settle was the market commentary guy for Invest Tools for over a decade, and then he spun off, he and his partner Brandon Van Zee, with something called Market Scholars, and marketscholars.com is their website. We're going to have them on as, or Dave on as a guest next week. Dave has a what I think is unique indication for looking at markets on a longer term. So we had a question earlier about, hey, can we do some stuff with longer term? Anything that we're talking about can be. I'm a typical short-term guy, so you'll hear me focus on those trades. But Dave's work is months, weeks and months kind of trading. So I think you're going to find that really interesting, especially if you're in the crypto world, because crypto is, where can I jump on something and hold on for quite a while, and that trend just takes off with me. So we will be interesting. Sui says thank you. We'll watch the recording again. Good. Hope you'll get a lot out of that. We heard the opening bell. Let's go back to the Aussie yen NASDAQ comparison. Let's drop down to the 5 minutes and see what's so right out of the gate. Right out of the gate, we got selling. We'll see, if the buying overwhelms, but I want to just, tout myself there for a minute, because I told you I felt like there was selling in the markets still to be done, and right out of the gate, what do we see? Selling. So that squares with my worldview and why I'm still holding on to those put options on the NASDAQ. We'll see whether or not that I got to cut my losses over the next day or so, or 2 days. But if we see continued selling going down, of course, I'm just going to ride it. Until next week, everybody, with the time you get back together and we do charts and chats again, take care and trade well.